This is Todd Baker from Legacy Capital Planners with our May 2013 economic update. In this video, we'll discuss a few of the events that drove the markets in May and kind of take a good look back. We'll also look ahead of what might happen in the days and weeks ahead to come. Markets were able to end May in the black, despite some weakness in the last days of the month. For the month, the S&P 500 gained 2%, the Dow gained 1.9%, and the Nasdaq gained 3.8%. Earlier in the month, the Fed announced a general plan for tapering its quantitative easing program as the economic recovery continues. Markets became volatile in the last 2 weeks of the month as investors processed this news. Fed Chairman Ben Bernanke clarified that the Fed will not be rushing to exit, but would tighten monetary policy cautiously as economic conditions continue to improve. Many analysts believe the Fed's bond buying program has been propping up markets, meaning that a withdrawal of Fed support could cause markets to slide. While it's good news that the Fed isn't shutting down its bond buying program immediately, we can expect additional volatility in the coming months as markets prepare for the end of the easy Fed money supply. Overall, economic data was positive in May. We got another look at the revised first quarter GDP, which came in at about 2.4%, down from 2.5% initial reading. The downward revision was expected due to some slower inventory growth. Consumer sentiment for May beat expectations, reaching the highest level since July of 2007. On the downside, the last weekly jobless report for the month showed an increase in unemployment claims, meaning job growth looks to have been essentially flat over the last 2 months. As first quarter earnings season wraps up, we can easily say that it's pretty average earnings season and not really much to get excited about. Profit margins are slightly up for the S&P 500 overall, but once you take out the financial sector, margins are down for all other sectors. While about 2/3 of the S&P 500 companies were able to beat profit expectations, only 40% were able to beat revenue expectations, meaning that demand was still soft and companies were able to do more and achieve more profits by doing more with less. Looking ahead, we may see continued volatility as investors digest economic data and continue to monitor the Fed actions. Markets have responded well to positive economic data earlier this month and year, but concerns about the Fed may cause investors to react in a contradictory way. As always, we'll be watching closely and looking for investment opportunities as markets move. Once again, this is Todd Baker with Legacy Capital Planners, signing off for the month of June 2013. I hope you all found this commentary interesting and informative, and we'd love to hear back and if you have anything to say or any feedback. Thank you. I hope everybody's doing well. Have a great day. Bye-bye.